In the last 7 days, £30,000 of my net worth has been absolutely wiped off the face of this earth. At the time of scripting this video, I was worth an estimate of £115,000 in assets, and now, just 7 days later, we're looking at £85,000. You should have sold your Bitcoin already. It's something that you're not going to hear me say again in this video. Come on, I'm not Dave Ramsey.
I'm suspect.
But the question still remains, when is the best time to sell? So, with your goal in mind, sit back, pay attention, because we're about to paint a picture of the next 12 months to help you maximize your profits. This is your guide for the coming market close. Make sure to stick around for the 4 possible outcomes of this bull market, because if you don't know, then you might find that you just missed out. What is the current model? The current model of this market, the crypto market, is the 4-year cycle, marked noticeably by the halving event. We explained all that in a previous video. You've probably heard the phrase, past results are not indicative of future results. And this is because, well, inductive reasoning just isn't rational. You're probably thinking, what's induction? What's he talking about? How is this relevant to the market? Weirdo. See, an inductive argument is one that isn't deductive. It relies on external factors to be making its inductions, and therefore the solutions that it comes to can't necessarily be said to be rational because they're not deduced like triangles have 3 internal angles that add up to 180 degrees. That's a deduction based on the characteristics or the terms of a triangle. Now, we can't really do that with the markets. There's too many moving parts and we're not working with pure concepts. But that's no way to live. We must find some way of drudging through the muck and the ooze so that we can become the masters of our own destiny. And despite induction's ability to be able to provide truth, we still use it every day. Modern scientific principle is built on induction, and without it, we wouldn't have many of the modern engineering marvels that we take for granted and use each and every day. But if we are going to use it, then the hardest part is making sure we understand the full scope of the scenario so we don't leave out any information that might be crucial to figuring out the answer. Halvening could be one such event. So Bitcoin halvening is an event that takes place every 4 years whereby the rewards received by the miners are halved. What this does is it reduces the supply to the market by rewarding the miners less and making it not worth it for them to part with their Bitcoin below a certain value. This causes miners to hold, demand stays the same and supply decreases. So basic economics would dictate that if the demand stays the same and the supply decreases, then the value of each good is going to go up because there is more demand per good. This is Plan B's stock to flow model, and it shows you information regarding the halvening, the amount of days to and from the next halvening, and the price of Bitcoin plotted all on a graph with a heat map to denote the space between the halvenings. Another factor is what might seem like some strange infinite money glitch. So companies will take out collateral loans against their Bitcoin. The reason they'll do this is because the dollar's going to drop. You can see most notably Michael Saylor and MicroStrategy of this approach having already had massive profits with Bitcoin and only raising more capital to continue to do the same. Let me put it in a more relatable scenario. Mike buys 2 Bitcoin. Mike gets a loan for, say, the price of Bitcoin, $50,000 against his Bitcoin. Mike uses that $50,000 to buy a car and has $20,000 to spend on his day-to-day expenses. Over the course of the year, has doubled in value. Let's say it's $100,000. He now has $100,000 worth of Bitcoin, collateral loan that he took out that he's able to pay off, the increase in value from his Bitcoin, and once he's paid the loan, he gets the Bitcoin that he put up as collateral back. What's going to happen in 2022? I mean, historical data shows that really there should be a crash either the last quarter of this year or the first quarter of next year. Every single year, the bull cycle has ended, is ended around about Christmas. History isn't true. History will change based on circumstance. Circumstances of which are evident in these past 12 months. The increased supply of fiat instruments, the fear of cash as dirty, corporate institutional investment, further adoption and more mainstream exposure, and easier on-ramps than ever before to access, purchase and custody cryptocurrency yourself. There are 4 scenarios that we need to be aware of coming to the end of this cycle. Numero uno, a new 4-year cycle. If it follows as it has, there will be a crash. This crash will be followed by another 4-year cycle. And so we play the game again, accumulate and ride it up. Number 2, it's still a 4-year cycle, but 2021 is a super cycle. This cycle, perpetuated by the events in the last 12 months, will skip forwards 4 years to the prices that we would have had at the end of the next cycle. 3, I've heard this mentioned by CZ over at Binance, but we're going to be entering a 4-year bull market. Now, this one sounds a bit obscure to me because we've got absolutely no data to base that on. He might be right. He might know something that I don't. I mean, he is the CEO of a massive exchange and I'm not. Last option. After this cycle, massive amounts of opportunity will be gone. It will start to act more like a stock. To the size of the market cap, it will be so much harder for 20% of the value to just drop out of Bitcoin. Once we get to a certain value, it's just not going to be possible. When we're talking $1 million Bitcoin, we're talking institutions, enterprise, and also pension funds in. Now, pension funds need to be in assets where they don't really move the money because it's not going to be that liquid. It's not going to matter over the course of 100 years. Hopefully now knowing these 4, you'll be able to start making a plan based on what you think is going to happen.